Welcome back, everyone. We're going to talk about some great topics as always. And my co-host is Julie. How are you, Julie?
Hi, Seewing. Good morning. How are you doing?
Fine, thank you. Julie is one of my investor member, and she put herself in the shoes of a typical newbie investor out there, or maybe a relatively experienced investor. She has been in the past few years. Your input, your thought process is pretty much a reflection of what's going on with the mom and pop real estate investors out there. They're trying to make ends meet financially and try to get into real estate. So, Julie, thank you for using the platform to represent you and a whole bunch of other somewhat challenged mom and pop investors.
Right. Thank you for having me.
All right, my pleasure. So, without further ado, let's get going. So we have something nice to share. I'm going to go over the recent website. They are a good source of data that I've used consistently, and I will continue to use because they report some high level housing market changes for all kinds of people out there. Whether you are a prospective primary home buyer or a risk investor, we all can need to educate ourselves. And Redfin produce some very good data. So, Julie, so without further ado, let's quickly finish this 15 modules at a time, different topics. And let's start off with the headline, the recent headline with the Redfin a couple of weeks ago, is the headline says 6 out of 7 people with mortgages have an interest rate of below 6%, but the lock-in effect is started to ease just a little bit. So having said that, so a lot of people have this lock-in effect. They're staying put and they're putting a low supply of homes in the market. That's contributing to the resiliency of the housing market in the US, at least for the past few years. And it also, Julia, is just because of the lock-in effect, we have continued to have an epic historic housing shortage. Okay.
Right.
So at the end of the day, when we have a epidemic of low housing supply or inventory and the pent up demand, at the end of the day, economics 101, okay, and prices will stabilize or go up as a
Yeah.
result of demand exceeding supply, and that's what
Great.
we are seeing. So let's go over again. 86% of American homeowners, and there are approximately 140 million homeowners in the US out of the total population of about 350 million in the US. 140 million homeowners. Of those, a lot of people don't even know. Do you know 40% of the homeowners does not even have a mortgage?
Oh, wow.
Their homes are free and clear.
Wow.
Also, Judy,
That's a lot of equity.
yeah, we went over this quite often, you and I, on our previous podcast. There are at least $40 trillion in equity, 40 trillion with a T.
Wow.
Right?
Amazing.
Julie, I don't know how many zeros, but there's a lot of zeros.
There's a lot of zeros.
So, Julie, most people, I want to go to this data once again in case people forget, most people's wealth are in their houses. That is the main asset. Majority of people's wealth are in the homes that they own or in the rental properties that they own. Just to validate, owning real estate have been and continue to be America's number one wealth building vehicles.
Correct. Absolutely. 100%. Yes. That's really amazing. The 40% not having mortgages. So that means of that 6 out of 7 home buyers, basically, those are home buyers that have bought in the last, like, what, 5 or 6 years or so. It's interesting. That's very interesting.
Very interesting. And you have a very late start in your real estate investing journey, but you ramp up very quickly. And we document your real estate journey quite consistently in the past few years, as you and I have been doing this, our joint podcast. But you're the proud owner of 6 rental properties, and you bought them only 3.5 years ago. Just go show you people out there, that's never a bad time to invest in real estate. It's never too late, regardless of your age. Okay. All I can say, Julie, all I can say is you and I are baby boomers, believe it or not. You have to start, you're baby boomers, and you are the proud owner of 6 rental property portfolios, which you and your husband bought under your own name, no partners, and also through the IRA, of course. You also purchase through your IRA. Anyway, so Julius, let's go down here. This chart again represents. Look at this. 22% of the people have a 30-year fixed rate mortgage below 3%.
Wow.
You know what that just means? I believe this 22% of people have mortgages. I believe these people will never sell their homes.
Yeah, absolutely. Why not? Why would you? That's a great deal.
Look, if you miss out on the historical low rates, low mortgages back in 2021 and 2022, you missed the boat, right? In order for this 22% to have 3%, in order for them to potentially sell their home, the mortgage rate have come down to 4 to 3% in the foreseeable future. And guess what? The chance of that happening is slim to none, unless we have another pandemic, which we don't want that, right?
No, we definitely don't want that.
We don't want that. Furthermore, you could make the argument that half of the people that have mortgages below 4%. With that said, so really, 57% of people have a rate before 4%. Most likely, most of these people are not going to get rid of the mortgage. We're talking about 80% of the people probably never sell their house. The only remaining people that are potentially selling a house, and not all of them going to do it, are people that have 6% mortgage, maybe 5% mortgage. Anyway, what we're seeing, the locking effect is going to be persist for years and years to come unless they find a way to bring more supply. Some people have to move, right? Many people are selling because of a job change or divorce or some stressful situation. And of course, a lot of people that's sitting in so much equity, they might want to sell, especially when they're downsizing or they're moving to a more affordable area. So a lot of people will migrate to a more affordable areas and sell their homes, take all the equity and maybe buy cash in a lower cost area. So that's all I have to say in terms of, so my takeaway from this article before we go into another article with Redfin, my takeaway is that we could have a low supply inventory for a while to come. It takes a mortgage rate to come down a lot to trigger the people to
start buying again.
Any last quick thought on
it's really good information, very insightful. Just the title alone, 6 out of 7 have mortgages below 6%. I think that's really pretty amazing. And good for those people that got in. I know a couple of mine are low below the 6%, and then I got a couple that are above. In the long run, those people that got those low mortgages, like you said, they got a great deal and they'll never sell probably until they're ready to retire or whatever. And which makes them a little challenging for those people that are trying to get into the market.
Yeah.
Challenging, but not impossible.
Exactly. Another Redfin article I want to go over this. Let's go over the big picture associated with the national real estate market, housing market. Let's go over some of these very important metrics. Let's go over the national market. So this is important. The gist of this podcast is that the housing prices is continuing to move up. I know there's so many negative doom and gloom headlines, and especially in the past 24 months with the rise of the mortgage rate from the pandemic low. And a lot of people got scared off because there's so much negativity out there. But you look at the real data, okay? We have to look at the real data to determine the housing market has been very resilient, and we have not seen any nationwide reduction of home prices. But with that in mind, let's go over the median sales price year over year. And we're talking this August, year over year, August. Look at the year to date, September. Okay.
Wow.
Or the median price, see, has increased 4% year over year.
Wow. That's awesome.
And have been increasing since 2021, 2022, 2023, 2024. Of course, based on seasonality, the second half of every year, due to seasonality, median prices usually fall because of the springtime, typically rising prices in every season. As you can see, I don't see any housing correction nationwide or housing crash, contrary to what the house crash rolls out there for this stupid trash.
Right. Well, that's so exciting. That's so consistent. Even sort of just we've only owned ours a few years, but we have definitely been able to experience some of that growth, that appreciation in the market.
Yeah, absolutely. The median asking price also is up year over year and been steadily increasing for the past 4 years. Again, no reason for primary home buyers or real estate investors to sit on the sideline. It's just absolutely no logical, rational, database reasons.
Right.
So
Exactly.
yeah, and of course, if you're a primary home buyer, of course, you're paying the highest monthly mortgage ever
Right.
history, all-time high because of the skyrocketing home prices and the elevated mortgage rate in the past few years.
Right.
So primary homeowners, they buy based on monthly mortgage, how much they can afford, but
Correct.
if investors buy based on the returns, based on the deals they can make, not based on the mortgage payment. So distinct difference. Look at the mortgage payment. The typical median price mortgage payment
Oh,
back in 2021 were a little bit more than 1,500. Now
oh my goodness.
we fast forward 3 years and the mortgage payment increased from around
Oh,
1,500 to 2,500. We're talking almost 100% increase in mortgage payment in the past 3 years. That's why we have the lowest home affordability crisis in the history of America.
right. Yeah. Oh my goodness. That's a big difference. It's
Yeah.
$1,000 in just what, 3 years?
Yeah. So now, as you and I discussed before, we're seeing a renter's nation.
Yes.
So if you're a landlord and you can take advantage
There you
of
go.
more people renting than ever before in history. So that's the way it is.
That's very true. Yeah. So for those people that are already in the market in terms of their own investment property, well, I think what you're saying is, see, there's an unlimited supply of renters just because of that increase. There's a big difference. That $1,000 in 3 years, that can totally shut out a lot of people from actually owning a property, but they
Exactly.
can still rent. They have to live somewhere.
Exactly. Yeah, pending sales have been, agree. Pending sales have been going down because of the demand. Demand is not that high. Up until recently, now the mortgage rate has slowly decreasing 6.2%, which is amazing for the Mortgage News Daily. So mortgage rate have been coming down consistently the past few months, which is one of the lowest in the past year. So that should spur more demand. So
Mhm.
more demand, then it'll put upward pressure on homes. There'll be more activities, more transactions, and
Right.
we'll see. So pending sales, even though it has been down year over year, it should go back up based on the rate. The mortgage rate used to be 8%. Remember last October 2023?
Yes. Hmm.
8%.
Hmm.
Now it's almost 2% lower 18 months later, which is shocking.
Yes.
Yeah, new listings has been up a few months ago, but now has subsided. So the new listings is barely above last year.
Wow.
So when you see new listings decreasing for the remaining of this year, we're not having a upsurge in inventory level that we have seen earlier this year. Things are stabilizing. We're becoming a healthier market. And active listings is very important to gauge about the trend of a housing market.
Right.
Active listings has been way up year over year, the first half of this year. However, since a few weeks ago, a couple of months ago, the active listings have decreased pretty dramatically. So
Mm.
as you can
Right.
see by this trend, due to seasonality, but if this trend continue to go down, the active listings, that means people are not listing their homes for sale. We'll see. I expect because the mortgage rate has been decreasing, we're going to see active listings go in a level off. They could be absorbed by the sales transaction and see a very interesting floodgate of activity is going to happen for the rest of this year and next year. Some people predict the mortgage rate going to come down below 6%. Maybe next year, 2025, if the rates come down below 6%, the psychological benefit, the psychological barrier trigger more surge in more demand. So that's my prediction. We could see some frenzy and the supply of inventory is still not going to be enough to accommodate the higher demand because of a lot of people don't understand, but this is the most important metric. 4 to 6 months is a balanced market, right?
Okay.
However, for the past few years, it's below 4 to 6 months. It's really, there are 3.6 months supply of inventory. Okay.
Mm. Mhm, mhm.
That means we're still in a seller's market, at least nationwide. That means there are more demand than there are supply of homes. And they will put upward pressure of prices nationwide. I know real estate is local. every neighborhood, every market is very hyper local. One neighborhood is different than another. Now, having said that, 3.6 months supply inventory nationwide is still a seller's market. Still, there are lack of supply, so demand is greater than supply. Economics 101, that's what we need to know.
There you go.
But if you compare the last 3 years, of course, the last 3 years is an anomaly. Okay, and historic low supply of homes, especially back in 2021, right? We all know that.
Right.
For the past 4 years, yes, the inventory of home is higher, but you only compare to the pandemic level, which is not a historical comparison. It's not.
Not apples to apples. Yeah.
Yeah, it's still not apple to apples. So, yeah, pending sales has been below the level in the past 3 years, but because of a higher inventory in certain markets, but still nothing that causes any panic. So let me see what else. Home sold in the median of 36 days. That's pretty normal.
Yeah.
Historical basis, even though it takes longer to sell compared to the last 3 years. 28% of the homes are sold above the final list price. So which is a pretty healthy market. And let me see, listings, there are some price drops, 6.6%. So higher than last year and higher than past 3 years. But again, this is a very limited data, very hard to compare the last 4 years because it's not, the last 4 years have not been a normal housing market condition, as we all know.
Right.
Okay, Redfin Home Buyer Demand Index has been the lowest in the past 4 years due to various reasons, but still nothing to be concerned about based on what's going on. Anyway, Mike, as I come back to hopefully situations getting better, here I am. So anyway, so what's your takeaway from the two Redfin article? The lock-in effect, the number of buyers, the number of people who still have low mortgage rate.
It's really good information, but it's just interesting how consistent it is across the board. You see the same peaks and valleys typically, but it's just, I think that thing that stood out for me was how much the mortgages have increased in just the last 3 years, or maybe it was a 4-year period. Yeah. So I think, again, the longer you wait as an investor, from an investor perspective, the longer you wait, the more difficult it can be to enter the market, because that $1,000 make a significant difference in you being able to be profitable or not profitable. But but again, I think that with any market, there are opportunity. You just have to know which side of the table you need to be on.
Yeah, my takeaway from this article is that if you're a primary home buyer, if you can afford to buy based on today's lower interest rate, 6.2, there's no need to wait, right? Because life goes on. You have to live your life. You cannot time the market. We all say you date the interest rate and you marry the house.
Right.
Again, if you can afford to buy, if you have a good job situation, you have a good credit, you have good reserves and all that, if you would need to buy a house based on your family situation, and then pull the trigger right now, right?
Exactly.
For investors, it's a different ballgame, right? You and I, this is what we do as an investor. We're not basing our buying decision on a mortgage rate. That's right.
That's true.
Mortgage rate is just a part of the component, is part of the cash flow analysis. If you can find a good deal in a markets that are affordable, that you can put cash flow with 25% down payment in a growth market where there's a good rental market, and regardless of mortgage rate, if you can cash flow, it's a good deal. There are so many great deals as you and I alluded to so often. No reason to stay on the sideline because you enjoy the multi-dimensions of how you make your money when you buy a rental property.
Absolutely. Yes, you're absolutely right. Yeah, definitely. Always a good time to take advantage of the market as an investor. Like I said, you just got to be strategic and don't keep waiting. Not plenty.
Exactly. Yep. Cost of waiting is gonna
It's very high.
is significant. Anyway, so if you guys out there, if you see a lot of value from this podcast, please like and subscribe to our YouTube channel. Please comment below what's your situation. If you're a primary homeowner, what's going on in your local market. Every market is different. If you're an investor, if you're on the sidelines, tell me why. Why are you on the sidelines? You can't find the right deal, you can't cash flow, then join our membership. Join our free network membership. All you gotta do is put your email down below into my website. You can be a free member of our real estate investing community where you will receive free daily email into your inbox on real estate investment opportunities, free real estate education.
Absolutely. And it's great information. You just really keep us updated. You work really hard to keep us updated on what's going on in the market, and particularly the different territories that you, like we had the Buffalo, New York area. You've got Florida, you've got Texas, you've got all these different places. If you're really interested in investing, there's no reason not to with the information that you provide.
Absolutely. Agree.